And thank you again, Marianne, for your presentations and for the time you put in. There's a wealth of knowledge and support at BDC and EDC, and all the manufacturers are encouraged. Please call them. I'm not sure if I'm getting feedback. Okay. So anyway, you're encouraged to please call them at BDC and EDC. Even if you have no intention of doing business with them or looking for their help, they can probably point you to other spots where you can get some assistance, which may be right back to your bank. But in any event, there was one question that was about the presentations. First of all, this webinar has been recorded and will be recorded and will be posted on our website. So everything you see here will be available for replay at a later time, probably tomorrow. But we can also, I'm sure, send you the presentations if you need in PDF format if you really wanted this. One of the questions, you're encouraged to type in your questions here on the chat box, and I will go through them as we go. So I think I've answered the question about the slides. We can make them available, and the webinar will be recorded. There's a question about multiple programs, and can companies access them, or are you tied to one or the other? And I think the comment there would be they should go to both, call Mike and Marianne or one of the BDC and EDC contacts you have locally, because you may be able to qualify in multiple sides. And the question might be, does BCAP qualify for companies wanting to transition projects to med tech? And is that one that maybe Marianne you'd like to handle?
Sure, I'll start that off, and I'm sure Mike will want to weigh in as well. So yes, we're seeing a lot of, especially among APMA members, transitioning or retooling for other opportunities, and helping during the crisis as well. And I would say yes, the BCAP programs and the BDC working capital loan are available for companies that are looking to transition or retool, whether they need working capital or to purchase equipment, to take on a new project in that particular space. So, Mike, did you want to add anything to that from your perspective?
Yeah, from the EDC perspective, it's quite similar. We have, as I mentioned, the BCAP guarantee is a product that is available. It is actually possible to both approach EDC and your bank for a traditional bank guarantee as well as a BCAP guarantee, so that you can have access to potentially more funds depending on what your needs are. In my current interim role supporting the Ontario as a sales rep, I am seeing a lot of asks for transition capital, and some of it is qualifying as BCAP transactions and others is more traditional business, but both are available.
Precisely. And I guess, Vince, the companies can take advantage of multiple programs as well. When we come back to that, one size doesn't fit all. So, BCAP using both crowns in that, but approaching, as Mike had pointed out directly as well. And, again, one thing, the wage subsidy is layered on that as well. So there's a number of tools to be used, and, it's not one or the other, but a combination of the best solution.
Okay, and so the question would be, are the banks aware of all these programs? I guess, because I had jotted down a question. So company X, they're supposed to go to their bank as a starting point, but I guess the question that was raised in the chat is, are all the banks aware?
So I can start, or Mike, go ahead, and then I'll fill in the blanks. Yep.
Sounds good. So I can speak for EDC in that we've naturally had high-level conversations with all of the major banks at our top-level bank relationship owners with the bank senior executives. and have struck agreements in principle and the willingness to participate in the co-lending and the co-guarantees that BCAP is based upon. Where we're at right now is the banks have to internalize and operationalize these decisions. And that is really happening, what I have seen this week. We're starting to see the banks going through their credit policies, operationalizing what has been agreed to at high levels, and deciding how they want to provide support via the BCAP mechanisms. So I think the awareness throughout the banks is changing as it progresses. I think the senior executive is going to be cascading more and more information down to their front lines in the days and weeks to come. Marianne?
Yeah, and we're in the same situation. The discussions have been held, and I know basically, you know, intercreditor agreements are being drafted and reviewed, and we're told that by late April, you know, so same sort of timeline as well. I think probably finalizing later next week, mobilizing their group, and by late April, we'll be, you know, on board to proceed. So that's why it's important. Things like I see a question here, are there any programs to bridge the gap? Things like the CEBA, you know, loans, because those are getting approved right now as we speak as well. You know, some of the programs that Mike talked about, and the BDC working capital COVID loan, if we can start looking at those immediately when we, you know, we've been doing that until BCAP is formalized in the next 10 days.
Okay. So to be clear then, no one's giving money out yet, right?
So, well, no, so from a BDC perspective, we are funding.
EDC, from a BDC and EDC.
Yeah, we are funding under those and our traditional programs as well,
Right?
But under those programs, yes. And feedback from some of our clients is that they have already been approved for the CEBA funding, so that was maybe a day and a half, and are expected to be in funds within the week.
Yeah, and from an EDC perspective, EDC is quite direct and candid in saying that we are not intended to be a direct funding institution within Canada. It is not our bench strength. That is why our solution in response to BCAP is via guarantees, because we leverage the day-to-day cash management function of the major financial institutions.
Right.
So we are enabling liquidity at the same speed, at the fastest speed we can, but we are limited to the speed at which banks get applications into us.
Okay, understood. Yeah. So a question received by me was, so how are the loans guaranteed? And I think did you say 1.8%? Well, that
yes,
Mike, right?
Mm-hmm. That's right. The guarantee fee that EDC charges for a BCAP guarantee is 1.8% of the guarantee amount. The guarantee is provided in a manner similar to our traditional bank guarantee, just in a more streamlined version to speed up the underwriting process, which is why it's important that we have the master agreements ironed out with the financial institutions, because they are able to move them along faster with that essentially pre-approved sandbox.
Yeah.
Okay, and because there is always discrepancies, if there is a discrepancy between what EDC says or BDC says, what the customer interprets, and what the bank ultimately says, what's the recourse for that? Who do they go to?
I think it's a really tough question to answer right now, Vince, given I can state for myself, I don't think EDC has actually done and authorized a BCAP facility yet, because to my knowledge, the first financial institution approved it only 2 days ago.
Okay.
So how to reconcile any discrepancy? I think it would be probably through traditional means of communication with the account managers, who would then engage upwards through the leadership groups in their respective institutions. I don't know, Marianne, if you have a different point of view.
So I know what I would say with respect to BCAP and from the co-lend, you know, it's the chartered bank, the FI, that is really driving the structuring, the pricing, you know, and the security position as well. So it's not like there's two agreements, the BDC portion and the FI portion. It's pretty transparent with respect to ease of use for the end user. So, you know, so on the BCAP side, you know, really what the house bank is, you're only dealing with one, you know, one contact there, and that would be the house bank, you know, that's organizing that. So, so that should be a seamless, you know, and from a pricing perspective and policy and structuring and security perspective.
Yeah, and I will clarify that my comments were kind of a mix of the
Yeah.
BCAP and our traditional guarantee. In the traditional
Right.
guarantee, EDC has a more active role.
Yes.
But in the BCAP guarantee scenario, like Marianne said, it is wholly through the financial institution. So any discrepancies would need to be ironed out on that side.
Okay, I have two, and I'm sorry if they're tough questions, but I'm asking them on behalf of.
Bring it on, Vince. That's okay.
Bring it on. That's what we do. So because you both lived through the 08 crisis, and we're going through a different crisis in 2020 of a different complexion, but nonetheless it's a crisis. Can you identify fundamental differences in attitude or response from the banks or the federal government in how you might have dealt with something in 08, 09 versus how you might be doing it today?
Ooh, that's a hot potato. You want to start off, Mike, and then?
Well, it's not meant to be political.
Oh no, I think
and
we can. You know, I think we can talk to that.
I'm
But Mike, go ahead.
I'm hoping you can say that you're much better equipped now than you were in 09 to help companies now, even though it's always a tough pill to swallow.
Yeah,
I think that's a great,
ahead,
great lens. And the example I'll give, as Vince mentioned, I've been with EDC for 20 years now. And during the last crisis, I know that our individual underwriting groups struggled to respond. The credit insurance team was working 14-hour days, but they weren't adding more bodies. And it was really focused, especially at the beginning, within the transportation sector. We all remember what happened to GM and Chrysler, and to a lesser extent Ford. What we're seeing now is, from an agility of response, I can say that within EDC, we employ somewhere in the neighborhood of 1,500 people globally. And EDC has repurposed, redeployed 75 people from their home jobs or from the house jobs to more customer-facing roles, asking them to reprise a past life. That includes myself, becoming an account manager again. And I fully expect that if circumstances continue, I might become an underwriter again, because that's where the organization and exporters need me. So that is a big difference from our ability and capacity to respond. I feel like also our programs have gone through a lot of simplifying and improvement and leaning out so that we're in a better position to deploy them quicker. And I think we learned a lot of lessons, those and others, from the last crisis. And from what I have seen, I'll hone in on the auto sector. A key difference here is it's not a gradual decline like we saw before, with credit deteriorating slowly, and what do you do? It is a dramatic shock to the system.
Yep.
And companies had the tools available to them to react accordingly. We did see Ford draw down their line of credit, so they had ample cash on hand, and other companies taking similar defensive measures. So I think we as EDC responded differently, and I think we've seen industry respond differently as well. And I think the APMA has done a great job with the cry for help on the medical devices side, and helping motivate industry to try something new, and to demonstrate your ingenuity and support the country. And I think EDC and BDC, and I'll speak for Marianne briefly on this, are happy to be involved in helping support that initiative.
Precisely. And if I can, I guess, you know, I'll share my experience from 08 versus this. And I think the one thing is everybody is far more prepared and evolved. And I'll take the EDC and BDC relationship, which was always pretty good, I will say, but now it's really solidified as a partnership. And, you know, again, I think there was times where, you know, was it a sprint? Who would offer the better solution? Where the reality now, it is truly a partnership and a relay where we're working together to provide the best possible solution. During this BCAP, you know, discussion as well, I see a willingness on the FIs as well to share and an openness to help entrepreneurs at this stage. So I think there's, you know, again, you know, to your point, we've deployed, you know, many of our employees into different roles that to help get loans processed and things like that as well. The response, you know, especially those first couple of weeks, has been unprecedented as well. So we're all being pulled in different directions to help, you know, close that gap as well. But I think from a mindset perspective, the FIs, EDC and BDC are collectively working together in a partnership for Canadian SMEs.
Perfect. The Team Canada approach is alive and well.
Mm-hmm.
Excellent. Thank you. So we have another question that came in. What banks are currently online with BCAP? I think you said one of them was, right?
Yeah, and I'm not sure if I'm supposed to divulge who has signed on or not.
Yeah.
It has gone out to the major banks. If there's a financial institution that is interested in working with EDC on the guarantee that is not already in discussions with us, we are happy to start that discussion. There is still a certain set of qualifying criteria, so I've been led to believe. I don't know what they are off the top of my head. It's not my role, but I am able to put them in touch with people from our bank group to do that screening.
So it's my understanding, though, the discussions have taken place. Again, even the EDC approved banks, there's over 40 brands that are participating with that as well. So it seems pretty vast as well. And if the bank is EDC, you know, I guess approved in that case, we'll work on the BCAP, the co-lend portion of it.
Okay.
And as I mentioned, on the COVID page of EDC's website, we have a list of the banks that are approved for our regular guarantee program.
Mm-hmm.
And those are the ones I believe that we have taken the first effort with to put the BCAP guarantee in place, particularly with the largest of the chartered banks to begin with.
Yeah, the big five, right?
Yeah.
Okay. Another question here too. What are the options for export receivables that are beginning to age beyond original terms? Number one. And then is the BCAP the best way to bridge the gap? The concerns are to have enough working capital to finance the cost of goods sold of their orders.
So those are, in my mind, two distinct questions. I'll answer the first one first. With respect to receivables that are going past their original due date, there's layers upon layers here. But if you're already insured, the long and short of it, that's why you have insurance. The insurance does not fall off if your receivable is past the due date. That's why you paid for it. What we are seeing is an increasing trend of foreign companies asking for rescheduling of due dates to accommodate the current circumstances. So when that comes up, we do ask the companies contact us and we talk through our customer care team to make sure that it's a reasonable request that's not taking advantage of the situation. And also just in rare cases, we have unfortunately seen, including the 08-09 crisis, companies inadvertently permanently change their payment terms with customers by agreeing to something that was not to their advantage.
Mm-hmm.
So we've seen that happen. In terms of new companies coming in, EDC, our current policy is, to my knowledge, that we can underwrite a credit insurance policy with a start date going back to the beginning of the previous month, which would be March 1st. So if a company were to want to take out a policy with us, we could go back to March 1st and insure receivables that shipped after that date. So if that was done and they're a few days late, it should still be possible. I'm not going to speak as an underwriter. They still have to obviously approve the credit and everything else, but those are the general parameters. And again, the insurance once on stays attached as long as you meet your other policy terms and conditions. So that covers off the first question. Vince, can you just read the second part again, please?
Is the BCAP the best way to bridge the gap? Our concerns are to have enough working capital to finance the cost of goods sold of our orders.
Well, in this case, the FI is taking, so if the need is $10 million, the FI is at risk of 20% of that, and then EDC and BDC are taking on the other 80%. So, it's it's helping the FI, the house bank, de-risk somewhat, and ideally be more liberal, like that under the circumstances.
Yeah, and I agree. I think a potential risk that I've seen over the years is when we have these situations when a company goes to talk to their bank with too narrow of a focus on a particular solution as opposed to the underlying need itself.
Right.
I think it's good to be aware of the programs that Marianne and I are sharing, to have the open discussion with the bank as to what they think would be the best solution to fit the need. I think there's value in there because in some cases, EDC might have other programs, for example, that are a quicker fit. So hypothetically, if you need working capital, but you have $500,000 of a letter of credit outstanding as security against something, that might be faster for us to execute than structuring a new loan facility. There's different options that can come into play.
Okay.
Yeah.
That's good. I had one question that we haven't really touched on. Just before all this hit, I know APMA was actively involved in advocating and pushing the whole advanced technology spectrum in our sector, Industry 4.0, IoT, IoTT, connected vehicles, autonomous vehicles, all that stuff. Now, a lot of those companies are smaller startups, venture type. I don't know, but I would imagine that's kind of gone quiet right now because everyone's got really important things to focus on in terms of their own livelihood when it comes to the larger companies that are manufacturing. But if you were one of those companies, you're stuck where the carpet's been pulled right out. You might have been dealing with GM, or you might have been dealing with Magna, or you might have been dealing with another tier 1 or tier 2, and now all of a sudden you're probably not getting much attention. Meanwhile, you had a really good initiative going on, and it's something that is coming or was coming. And I'm just wondering, have you guys heard or seen any of that? Is the venture capital funding to support those types of companies an active product within your portfolios?
So I'm going to just touch on this a little bit as well, and what we can do is send some further information. So we do have a program as well where we're going to be matching VC funding as well. It was announced later last week, so I'm not as apprised earlier this week on it, but there is a program that's going to continue with a matching program for the VCs as well, and probably an investment into the VC ecosystem. So what I can do is forward further details on that as well. I mean, it's been a topic of discussion amongst again our tech group and our tech clients.
Okay. Yeah, and beyond that, I'm not as involved in that part of the industry myself, but I understand, I've heard rumblings of something similar, and that there's more work being done to support venture capital. I'm not sure what exactly it is, but what I have seen on the front lines is information with respect to companies like this. They are still actually trying to make the transition to supplying med tech devices, and as such are trying to access new revenue streams that way. Beyond that, there is still the opportunity of some of the other programs such as SIBA that may be available to them as well.
ICAL has already posted the link. Thank you very much. He's pretty efficient. Appreciate that.
Yeah, it's right there in the chat box.
Yeah.
Yeah, but if you send it to us, Marianne, whatever you got, we'll get stuff. And then, so this one probably isn't anywhere, but I'm going to put it out there because I know the companies are going to have to deal with this, and they're probably thinking about it today. Our e-news went out today, and it was full of back to work preparedness. between risks, between how to manage employees, how to manage liabilities, how to manage your operations, how to start up. And one of those things is going to be managing that risk requires you to probably change some production plant structure or assembly line or the manufacturing cell or who does what, and where two people used to be side by side, now they're going to have to be two meters away, and the masks and stuff. And I'm wondering, that's going to cost a lot of money to some companies, depending on where they sit. Is that part of the financial help you guys can provide?
Absolutely. Yeah. You know, I mean,
Yeah.
that's again, you know, that's the working capital need to address getting back to, you know, what a new productive environment would look like. So I would say absolutely yes. And in both BCAP and some of the direct lending and the programs that EDC offers, absolutely.
Okay, well, that's encouraging to hear.
Yeah.
Because it's not really tied to a product.
No, and I think what kind of comes in there, and I know there's been some discussions internally about this, but depending on how long this lasts, the companies, assuming they're still getting paid by their customers, are going to come into situations where they're going to be upside down on their borrowing bases.
Yeah. Yep.
And that has been a source of discussion, as well as the reality we all know there's going to be a need for working capital to retool and modify production. So I think it's definitely it's something we want to talk about, we want to find the solutions for, but I think it's going to be one where it's going to be a combination of specialized asks because of complicated circumstances, or leveraging the programs that Marianne and I have talked about today.
Okay, and then so to go back to probably one of the, half of the problem here is when you go, we talked about is not traditional banking stuff. This is weird stuff. It's never been done before. And you guys are on the back to support everything. So when there's an initial pushback from the person at the bank of, I don't know what you're talking about, or there's no way a bank is going to lend you money for blah, 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 blah. What should they do?
I think this is, you know, the open dialogue where, you know, we bring in all the stakeholders and have a discussion. You know, this wouldn't be the first time that Mike and I had ever been on the phone with a bank or a client and to hash out what a potential solution could look like. You know, so communicate. You know, and you can't really over communicate in these trying times as well. And this is why I think it's so important. But you know, yeah, ask a question. You know, escalate it within the bank, but also bring in the other stakeholders, being EDC and BDC.
Okay.
Yeah, I fully agree, and I know right now that we are there's a lot of interest in these scenarios when it comes to medical device manufacturing. That is an area where we're having a lot of you know, multi-pronged conversations with the banks, with companies doing the change in business. And I cannot stress what Marianne said. We're happy to have those conversations. I think I've had 3 conversations with bankers already today on top of client calls. It's half my day.
Okay. Now there's a question that stuck in here that I didn't see. Unremitted government remittances have traditionally reduced the amounts available under working capital type of a revolver calculation. Given that the government has deferred many remittances, including HST, income tax, WSIB, EHT, whatever that means, and certain tariffs, this can now be a big reduction to available working capital. Is this the case? Head nod.
This is, you know, it's funny. We were on a call yesterday with our credit people, and I asked, how concerned do we have to be? Yeah. Oh, go ahead. Sorry, Mike. Are you?
There was a bit of a lag.
Oh, okay. Yeah, I guess, you know, one of the things that, you know, how granular, you can't, you know, common sense here, you know, I mean, that's the one thing. We don't know the full impact of this. You know, we had a question around, should we be adjusting a working capital ask to take into consideration the wage subsidy program? And it was, you know, how can you do that? We'll spend more valuable time trying to figure out an answer as opposed to actually properly underwriting something to get to a response. But Mike, I don't know what your thoughts are here.
Yeah, I actually had a complicated ask I was looking at yesterday where it actually was geared around a company that had a facility that was intensive on government credits.
Mm-hmm.
And it really drove home the point to me that it really does come down to a case-by-case situation where it depends on what's in your credit agreement and if there might be a mechanism for getting some relief from your particular bank in how that is structured given what's happening right now. It's a tricky situation for EDC, and I'm assuming for BDC as well, is ultimately a Government of Canada receivable carries the same credit rating as anything we put on your balance sheet.
Yeah, yeah.
Okay. We've reached our 1 hour time slot, and I think we've filled it, and we can probably go on for some more, but you've got the contacts of our friends at EDC and BDC, and if you need any assistance to get a hold of them, you can certainly come to APMA, to me, AL, or whomever. We'll be pleased to share. There are partners in crime in this, and we look forward to their continued engagement and are thankful for them to be around us in this time of need and other times too. So unless there's any last quick questions, I'd like to thank everyone and conclude the event.
Okay.
No, that's it. All right.
All right.
Thank you. Stay safe.
Thank you, everyone.
Bye now.
Bye-bye.
Thanks.